Hello everybody, welcome back. Let's have a look at Bitcoin then, and things are looking a little bit, well, not that I predicted anything, but it did appear that yesterday we'd found ourselves a top, which is why I kind of cashed out at those levels. Now I am expecting a pullback, but I don't think it's going to be incredibly dramatic. But if we're looking at this formation here on the 30 minutes, which isn't really anything I'd really do normally, but we are trying to spot the top to see if there's going to be a pullback. It looks as though we've got a bit of a messy but a kind of a head and shoulders pattern going on here, which usually means that once the neckline is broken, which it kind of already has, I mean we've got support level from what we can see here, the temporary candle body support level around about 17,500 or so. So that would be the neckline more or less. So we've poked our heads above there at the moment. I think there's still a lot of bulls trying to buy these levels back, but I think the pullback is more likely to happen now. We've got to look at what sort of areas are the most, I suppose, predictable or the most likely to come down. So in order to do this, we're going to go to a different time frame. We're going to go to a 4-hourly just to have a little bit more insight. So we can see here this pink here is essentially the center of the Bollinger Band. It's the 20 simple moving average, and we're getting good buybacks on those levels already. That's just been hit in these last 4 hours. Again, you know, these wicks here and here correspond to this kind of price around here. If this were to break down, I think the levels that we could be looking at its very, very lowest, I suppose, at this moment. I don't think we're looking for a catastrophic chaos collapse at the moment, but I think what the most likely area is going to be around this one here, which is a nice wiggly line I'm drawing all over. That's really messy, sorry about that. Just this bit here, which is the green 50 exponential moving average on the 4-hourly. I think that's the most likely area of support that we're going to get, and it also corresponds to where we kind of had a lift-off moment from this candle body here. So I think this, as far as the price is concerned, we're kind of talking about 16,650-ish, and there I probably would expect to see a significant buyback for the moment. Now, this could continue to make higher highs thereafter, but we'll have to see how significant those buybacks are at those levels before we work out, you know, is this going to continue up, or is this just going to be not a dead cat bounce, but a bounce nonetheless. We've got to work out, is the bounce going to take us beyond this orange line here, which is the 10 exponential moving average, which usually signifies some form of continuation if we're above it. If we've been rejected from it, which it looks like we are here on the 4-hourly, then it might mean something else. It might mean that we're going to just come back down again and test that lower level of support, and maybe come down further after that. Now, if we have a look at some of these other indicators, the money flow index on the 4-hourly was quite high at this level. It wasn't the highest it's ever been by any means, but it was very high. So generally when we get that high, it is a bit of a sell signal into itself, which is one of the reasons I kind of got out yesterday. Now we've got our MACD cross on the 4-hourly, which doesn't mean a great deal in itself, but the fact that when we got to this level here, you know, the RSI was pretty overextended. The money flow index was certainly overextended, and we started to get divergence ever since then, and now this kind of looks like it wants a little bit, you know, it wants to come down just a little bit more. So it's not the end of the world. Like I say, the bull run is certainly still in full swing. The worst case scenario for me, while still maintaining a bull market, is to come down to this trend line here, and this trend line is like the bottom line. If we broke down beneath here, then it would be tragic. But at this stage in the cycle, with this amount of sentiment and a lot of buyers, institutional and retail, I don't think we would be breaking down from here anytime soon. But I'll show you how relevant this one is, and those who are sort of new to the channel might not have seen this, but those who are long-time subscribers are probably very bored of me talking about this. But we get rejected and supported all the way up this trend line for several years now, about 3.5 years going on now. So we go back in time just to show you a few examples. When we broke above it for the first time on this chart, these candles don't look like much, but they are. So this is where we are right now. We've come down to test it. This is the kind of situation that we're in right now, where it looks as though we're going and making extremely high highs. So from the bottom of that trend line all the way to the top of that wick, that was a 46% move, similar to that of what's happened recently. We haven't made a 46% move since we've broken out of that trend line, but it has certainly gone quite high. In fact, we'll just measure it just for fun. It's quite high. Oh, it is very relevant, actually, very relevant now. So 44% move already from when we broke out of there. So okay. this isn't really something that you want to pay a great deal of attention to, but it is worth noting. So when we launched from this area here, that was a 47, we've now done a 46. We kind of had a spinning top candle on the daily chart here, which says indecisiveness, and then we came all the way back down to test that trend line. Again, we are in a bull market. We're in a bull market then. That was a 30% retrace, but then that would have shocked a lot of people getting worried. But then when we bounced from that trend line, we took ourselves all the way up to this level here, which is basically the tippy top, and we launched 267%. So being above this trend line is extremely bullish. Being beneath it is pretty bearish. You can see all the way down we tested it and bounced from it until we actually broke down and found it as an area of resistance, and then stayed beneath it for a considerable amount of time, actually, even being rejected here and on this wick here. And then finally, when we did get above it last year, we broke above it and then tested it and tested it and tested it and tested it and tested it, and even broke above it and tested it and tested it, and then finally when we found it as rejection again, it was a significant retrace all the way back up to test it and then back down again. Anyway, I've gone through this a million times, but it's a significant area, and it's one that's worth thinking about, because even though this area now is looking extremely bullish and we've launched 46% from that area, it doesn't mean that we can't come back down to test it. But at the moment it's looking quite unlikely, but it has to be considered that could actually occur. But until we even speak about that, there's all these levels down here where the price action kind of corresponds. Now we're on the daily chart here, so we've been above this 10 exponential moving average, even the 7 simple, for quite a long period of time. Coming down to test that would bring us down to kind of the area that we mentioned on the 4 hourly, which is around 16,600. So I think that is the area of significance. I think that there's a lot of confluence there with the price action and the moving averages on a variety of different time frames. We've got our spinning top candle like we had back in 2017 when we broke out of there. We can't really see it, but we kind of had one, and so it looks as though now it could perhaps maybe retrace first to this level. Anyway, 16,650 is the area to mark off, and probably find a relatively decent buyback and bounce from that level. But if this does finally break down from here, we will be coming back down to these blue box areas around 15,700 to maybe 15,000 flat. But again, we've got a lot of areas of support beneath us, so there's no reason to think that we are going to come down to this level, but we can't rule it out. And even if it did come down to that level, it's not the end of the world. We're still firmly in a bull market, provided we stay above this trend line. Anyway, I'll leave it with you there, but thank you for watching. I hope you have a nice evening, nice day. In fact, it's quite early already. It's only 11 o'clock here, and take it easy.